On March 4, 2025, President Donald Trump's administration imposed significant tariffs on imports from Canada, Mexico, and China, marking a pivotal escalation in global trade tensions. These measures included a 25% tariff on all Mexican imports, a 25% tariff on Canadian goods, with a 10% levy specifically on Canadian energy products, and an increase in tariffs on Chinese products from 10% to 20%. President Trump justified these actions by expressing concerns over national security and illegal activities, stating, "Drugs are still pouring into our country from Mexico and Canada at very high and unacceptable levels." In response, Canada announced retaliatory measures. Prime Minister Justin Trudeau stated that Canada would impose 25% tariffs on $155 billion worth of U.S. goods, starting with $30 billion immediately, and the remaining $125 billion to follow in 21 days. Trudeau accused President Trump of aiming to collapse the Canadian economy to facilitate annexation, a notion he firmly rejected. He also dismissed Trump's claims about fentanyl flowing across the Canadian border as unfounded and corrected misinformation regarding U.S. banks' operations in Canada. Ontario Premier Doug Ford announced that the province would impose a 25% export tax on electricity supplied to 1.5 million homes in Minnesota, Michigan, and New York as a countermeasure. Ford further stated that if additional tariffs are introduced on April 2nd, he would instruct provincial energy producers to halt electricity exports entirely and redirect power to support local manufacturers. Additionally, Ontario plans to stockpile nickel, typically sold to the U.S., and redirect sales to alternative markets, as Canada supplies approximately 50% of its nickel production to U.S. companies and the Department of Defense. Ford also confirmed the cancellation of a $100 million contract with Starlink, Elon Musk's satellite internet company, and announced the removal of all American products from LCBO shelves, banning U.S. companies from bidding on Ontario government contracts. Nova Scotia Premier Tim Houston condemned President Trump's tariffs, calling them short-sighted and reckless. Houston announced immediate measures, including banning American businesses from bidding on Nova Scotia government contracts, doubling tolls for American commercial vehicles passing through the Cobequid Pass, and removing all American-made alcoholic products from store shelves. The province's 2025 to 2026 budget includes a contingency fund to mitigate the economic impact of U.S. tariffs. Houston emphasized the need for interprovincial cooperation to eliminate trade barriers within Canada and strengthen domestic and global trade. Alberta Premier Danielle Smith criticized the tariffs as an unjustifiable economic attack and accused President Trump of violating the trade agreement he signed during his first term. Smith warned that the tariffs would harm both Canada and the U.S., leading to rising costs for essential goods and potential job losses. She announced that Alberta's cabinet would meet to finalize retaliatory measures and called for national unity, urging all provinces and territories to eliminate internal trade barriers and fast-track key resource projects. Smith also advocated for increased military spending to ensure national protection in an increasingly unstable global landscape. Manitoba Premier Wab Kinew announced the immediate removal of American alcohol from all Manitoba liquor marts. Newfoundland and Labrador. Premier Andrew Furey condemned the tariffs as unjust economic harm and announced measures including removing U.S. products from liquor corporation shelves, reviewing and halting procurement of U.S. goods and services, and expanding market opportunities with international partners. Furey emphasized the importance of collaboration with industries, communities, and labor organizations to navigate the trade disputes fallout. The U.S. stock market experienced significant declines in response to the tariffs, with the Dow Jones Industrial Average falling nearly 800 points, erasing gains made since the election. The S&P 500 and NASDAQ composite also decreased by approximately 2%, reflecting investor concerns over escalating trade conflicts. Sectors with high exposure to international trade, such as automakers and home builders, experienced notable stock declines. Economists warn that ongoing trade tensions could lead to higher consumer prices and potential inflation, affecting various sectors of the U.S. economy. In summary, The implementation of significant tariffs by President Trump's administration on imports from Canada, Mexico, and China has led to retaliatory measures from affected nations, escalating global trade tensions and causing market volatility. Canadian provinces have announced various countermeasures, and the U.S. stock market has experienced substantial declines, reflecting concerns over the potential economic impact of